let's get the sort of handset, smartphone, and memory situation out of the way, if that's okay. Clearly this is impacting outlook for the smartphone market across this calendar year. How do you think it showed up in the earnings that you posted? And would it have been slightly better if the situation were different?
Yeah, good morning. Good morning, Ed. So first off, the quarter was amazing for us. We had not only record revenue, but record royalties, $1.24 billion in revenue, nearly $740 million in royalties. And if you just stack that up, that's 27% year on year. Our data center business is exploding. We were up 100% year on year, probably north of 100% year on year. So to your question, no, the memory situation isn't really impacting ARM so directly. And you might ask, well, why is that? Well, number one, we are spread across a lot of different businesses. As I said, the data center business is increasingly growing for us, and we think in a few years it'll be our largest business. Secondly, our products are used across the board. So what we tend to see in memory shortages is the bottom end of the stack starts to get impacted, and that's actually lower royalty rates for us. So as a result, we don't get impacted very much. So no, short answer is no impact this quarter. And we raised our guidance for the next quarter because, as I said, we're just not seeing that kind of impact. But I'm not denying that it's there, but for the ARM business, the impact is quite minimal.
Rene, thank you for that. Data center royalty revenue grown 100% year on year, as you outlined. I get the same question for you from everyone, sell side through to buy side, which is give me a specific year, mark it on the calendar when ARM goes from being handset to data center, and it accounts for more of your business. Is that inflection point clear on your calendar at least?
It's very clear, and that's why in the earnings call I said in a few years. As you know, we don't typically provide forward guidance on an annual basis, but we have a line of sight that says we see it coming. And it's probably coming sooner than we had thought. And the reason for that is the data center growth. But if you click below that, why is data center growing so rapidly? It is the presence of ARM CPUs in the data center. We're now over 50% market share at the hyperscalers. Secondly, the CPUs that are being used are using more ARM CPUs inside the chip. 192 cores, for example, inside a Graviton chip, going from 96. Nvidia Vera going from 72 cores on Grace now to 88. So what does that mean? That means more cores means more royalties and high growth rate. Well, why are there more cores? When you think about agentic AI and everything associated with agents moving workloads across systems, managing workflows, et cetera, that's the kind of work only CPUs can do. So to your question, while we're not giving a date, we can see it, and it's coming sooner than we had thought, even probably 6 to 9 months ago.
And probably on the back of when you look at an Alphabet increasing its capital expenditure by another, well, potentially $185 billion, Rene. Is the AI bubble, this worry about AI infrastructure build out, a thing of the past to you, or there are still some bottleneck issues that you're concerned about?
Yeah, so it's a great observation, Caroline. And yes, there's huge growth in Google's CapEx. Not all of that $180 billion is coming to us, of course. But what does that say? We continue to see investments in the data center, whether it's what Meta had announced or Microsoft announced, and now Google, Alphabet, that exceed what people had originally thought was even possible, even a couple years ago. If you go back to when we announced the Stargate initiative in January of 2024, $500 billion over a number of years. People looked at those numbers and said, how is that even possible? Now 18 months later, it looks quite credible. So bottom line is, we are seeing such an investment because the AI opportunity, the way I like to think about it, is kind of the final frontier relative to technology. When you think about what could be beyond AI, it's really hard to imagine. So also the fact that AI has really had very little penetration, let's say into large enterprise or into our health systems or things around drug discovery. So there's a long runway. I think people are a little nervous about it, as decidedly so, because we've just not seen it before, right? We've not seen the order of magnitude we're talking about. So it's somewhat natural for you to look at it and say, well, gravity's got to hit it sometime. But then if you intellectually look at it and say, my gosh, is AI going to be something that will change and transform how everything is done? Well, of course. And then there's going to be investment to support that, and that's what we're saying.
Investment to support that. We mentioned Stargate. That immediately makes me think of Massa. And you were clear on the call yesterday that you've spoken to him. You don't think SoftBank is in any way going to sell down its stake in ARM. But how much is that an overhang in the longer term? And how much actually do you want to see more free float of your stock?
Well, I have one very large shareholder who I talk to quite frequently who loves ARM, and he's very long on ARM. So he has no intention to sell at all, and I shouldn't even say anytime soon. I don't know when that would be, quite frankly. We do talk about it. He said he's got no interest in selling. How that impacts the float, et cetera, that's not something, candidly, I spend a whole lot of bandwidth thinking about. But he's very, very long on ARM because he sees the enormous opportunity that we have. And if you think about what we've done since we've gone public, Caroline, in the fall of 2023, we told the world we'd be growing at 25% year on year for 2-3 years, and people didn't believe it was possible. Here we are now a couple of years later, and we're beyond what we told investors during our roadshow, and things are even stronger than they were at that time. So as a result, he sees it. He sees probably more of the data than anyone does, and that's why he's not selling.
Rene, I want to go back to CPU. January 26th, Bloomberg speaks to Nvidia CEO Jensen Huang, and he speaks for the first time about selling to the market via a CPU as a standalone. And that seemed critically important, because if you think about the pipeline for Blackwell and Rubin, right, those are GPUs coded in ARM-based architecture. And those building, they don't want to sort of have to cross-pollinate x86-based platforms with their ARM-based GPUs. It seemed to be really substantive. Could you explain how much of a boost that was for ARM, and whether this idea that the Vera CPU goes into the market as a standalone product changes the trajectory at all? Because at the same time, Nvidia talks up about how much content it owns proportionally in the overall system. Just take it and run with it, please.
Yeah, so first off, thrilled to see Jensen say that. They're a great partner, and Vera is a great product. And as I mentioned earlier, Vera's gone now 88 CPUs inside it, CPU cores from 72. So why is that a really good thing for us going forward? Well, primarily because when you think about the data centers and how they're evolving from what is general purpose compute, moving to AI compute, a mix of training and inference, and those inference workloads are agentic, that's right down the center of the plate for what the CPU not only is good at, but can only do. So what that means is inside the data center, you're going to start to see movement towards a homogeneous type of structure where people would love to have the ARM stack running almost everything. It's just easier from a maintenance standpoint. It's easier from an upgrade standpoint. It's easier from a cost standpoint. So, and also the flexibility it can afford. You can build a tremendously efficient custom system based on ARM. The Vera Rubin platform, compared to Grace Blackwell, uses 6x the number of CPUs. And that's when you look at the storage, the DPU, the offload. That's a huge increase.
Yeah.
So yes, selling loose Veras, that's a great thing. We're super happy to see that.
Briefly, Rene, you have such a bird's eye perspective because you're working with Nvidia, but also you're working with OpenAI. It was reported potentially was looking with you at your technology to be working with its own custom chip with Broadcom. You've got Meta looking at custom chips, of course. How do you see this evolving?
Yeah, I have a lucky job. I get to work with just about everybody in the industry across the planet, whether it's in the fab foundry area, whether it is a chip company, whether it's an OEM, whether it's a software provider. We work and talk to everyone because ARM is just so pervasive. The common theme we see is continued investment in AI, and not just at the data center. It's trying to figure out how do you run those AI workloads everywhere. How do you run them in wearables? How do you continue to make them more efficient in a smartphone or a PC, or in physical AI, whether it's autonomous driving and or robotics? So we're involved in all the conversations, and the common theme is heavy investment. And one of the challenges that we see in the chip world around this is, as you know, it takes a couple years to build a chip. The IP that we develop that goes into the chips maybe a couple years in before it, trying to predict what the architectures look like 4 years after the chip has been designed, where the AI models are going, is really very tricky. That lends itself also, though, very well to ARM because we are programmable, we are flexible, and we are low power, meaning that wherever the chips drop, no pun intended, we should be in a very good position to be able to drive those workloads.